I had another go at it.
You tried?
Yeah. So I
That,
just went through. I did find quite a few things that I found a little bit confusing.
yep. So
Uh,
maybe it's a good idea to discuss them.
yep, sure.
Yep. So let me share slides so that we can discuss Rita process chart and see that uh, how Rita and her team, and they made this chart, what they think, and in fact PMI also accept this chart in a sense that there are few questions which are based on this chart, so it's pretty important to understand it. Now, what are the confusions? Sorry, Tanya.
Let me see. So the request changes obviously appeared in 4 different columns.
Yeah. So
Okay.
basically, changes could be requested anytime. That's why they are everywhere from initiating till monitoring and controlling. Yeah.
Yeah. In the planning one, I think the biggest confusion for me was just in the planning one with so many different parts in there is getting them in the right order.
Yeah.
And so things like determine team charter and all
Yeah.
roles and responsibilities. I
Yep.
kind of thought that was part of initiating, and then even though it wasn't there, it would have been further up.
Yep.
Think,
So.
but it was quite a wee. It's like midway down.
So.
Yep.
So project chart, sorry, the team charter was part of planning, isn't it?
The team charter. Good thinking. That was my bad. I wasn't thinking about project charter. I was getting confused with project charter. Thank you for clearing that up.
Yeah, not a problem. So it was team charter. So basically you can say it's a working agreement between the team members.
Yeah.
Yeah.
The fourth one down in planning, they assess what to purchase and create procurement documents.
Yeah.
I'm assuming because even then you haven't necessarily got all of your resource requirements at that point.
Yeah.
So it's quite a wee way up.
So there are multiple reasons behind that. Why assess what to purchase and create procurement documents. One of the main reason is basically when we say procurement documents, there are many different type of documents. Chapter 12 is on procurement management. We will see that there is procurement plan, and then there are procurement strategies, and those strategies, and especially the plan, they talk about both goods and services. When we go for the goods, then we have to think about the lead time. So it's always a good practice to start thinking about your procurement so that you can cover that lead time, the time that is required to arrive the goods to your workplace, to your site. So this was one of the reason. The other reason was, for example, if you need to hire some more team members that are services, that are basically your contractors, because you are developing your team. So if you require the contractors, at least you should plan about it. And if contractors are required early, or you need to prepare their contracts, they are starting after 1 month, etc. So it's good to think about your procurement component well advanced to take care of that lead time.
Okay.
Yeah. So yeah.
Can you explain exactly what go back iterations mean in the planning context?
Yeah. So as I told you that though it's a waterfall approach, but it's not very exactly waterfall. Still, it's iterative. When we talked about the concept of rolling wave planning, rolling wave planning basically talks about that. As more and more information will come, you will keep on doing more and more planning. For example, when we do project management plan, soon we will see that project management plan really doesn't mean our schedule. Okay, project management plan is a much broader terminology. It talks about all different small plans. So just think about that you develop your communications plan, okay, and later then you develop your stakeholders plan, and then you identify a few more stakeholders. It means that you need to go back and you have to update your communications plan. You have to further refine your communications plan, mean your overall project management plan. So as more and more information will keep on coming, you will go back and keep on updating your project management plan and your project documents until it become a very realistic plan.
Okay. Okay.
Yeah.
That's enough from me.
Yes. Uh, so did it make some sense?
Yeah. Yeah. Talking to me?
Yeah.
Yep.
Yeah. Any confusion, just feel free to ask.
Yeah. Most of it went into the right columns and things. Not all, I would say maybe, I don't know, 85%. But then I think I took a long time to do the planning one, just some
Yeah.
of the way that the statements were worded.
True. So in fact, the planning component, as you have seen that here the activities are in sequence. In initiating, executing, monitoring, and controlling or closing, activities need not to be in sequence. However, when we are doing the planning, there are dependencies between the things. For example, if you look at create network diagram, you cannot create your network diagram until you develop your activity list. Similarly, you cannot create your activity list until you don't know that what work packages you are going to produce, so on and so forth. So that's why uh, planning components are in sequence.
Thank you.
Yeah, and basically what we are going to do, we are going to discuss each component of planning one by one so that we can clearly see. And for that sake, I just need your help, especially, yeah, if you can read for me, Pedro, what is the first component of planning?
It's a determined development approach,
Hmm.
life cycle, and how you will plan for each knowledge area.
Yeah, so determined development approach is very important. If we are going for waterfall approach, our way of planning would be totally different. If we are going for agile approach, then our planning would be totally different. So development approaches are hybrid, waterfall, or agile approach. So firstly, we need to determine that so that we can plan accordingly. Then there comes life cycle. Life cycle is nothing but the phases through which a project passes from its start till uh, closure. And then there comes how you will plan for each knowledge area. It is basically talking about a high level plan of all the knowledge areas. No doubt we will further refine that plan, but initially we just start thinking about different knowledge areas, mean how we will manage our scope, how we will manage our schedule, what methods we will use, what approaches we will use, which software package we will use, and then there comes cost, how to manage cost, how to estimate the cost, how to determine the budget, how to determine the contingency reserve. All those things, our initial thought process about those things starts in the first component. And in fact, there are 10 or more than 10 different knowledge areas. We are going to discuss them today, and that we need to think about as a project manager. Again, here the most important thing everybody should keep in mind is uh, we are thinking about large projects. We are thinking about multi-million dollars projects where there are a lot of team members involved, thousands of stakeholders involved. But if you are working on small and medium projects, then you need to tailor everything. It's not compulsory that you are going to do everything which is given in this standard or in this framework. Tailoring is always there. You need to think you need to make a decision that how much in depth or how much in breadth you are going to use one process, how thorough you are doing planning for the communications, how thorough you are going to do the planning for the quality. It totally depends on the nature of the project, enterprise environmental factors, the team size, the team structure, the size of a project, complexity of a project, so on, so forth. So throughout our discussions, we will talk about tailoring. How can we tailor each process? Uh, so this is one thing I really want you to keep in mind. Next component, Grace, can you please read for me?
Sorry, I can't read as much though, Faizan. Are you
I'm
able
sorry.
to?
Yeah, I'm sorry. That's all right. Anybody else can read the second component? I cannot zoom in, I think.
Okay, sorry about that. Faizan.
Define and prioritize the requirements.
Okay, so define and prioritize the requirements. That's basically first step. When we are setting our scope, either it's an internal project or scope is coming from the clients. Okay, so maybe we got the whole scope document from the clients, but still we need to define and prioritize our requirements. Requirements could be of different type. Requirements could be business requirements, stakeholder requirements, product related requirements, project related requirements. And when we talk about product related requirements, they could be further divided into two types: functional requirements, non-functional requirements. We have to gather all those requirements. Basically, we don't gather it, we elicit those requirements from our stakeholders, from our documents, so on and so forth. We elicit those requirements, and after elicitation of our requirements, we analyze those requirements. We refine them, we verify those requirements, we validate those requirements. When all those processes are done, then what we do, we prioritize our requirements. Maybe if we gather around like 1000 or 1500 requirements, maybe we are not going to add all of the requirements in our project scope because project schedule and cost is not allowing us. Then you have to prioritize them and only add those requirements which are at the top according to stakeholder needs. So once requirements are defined and prioritized, you are now in a position where you can create your project scope statement. That is our process, component 3 in the planning stage. Create project scope statement. Project scope statement, we are going to discuss it in detail, how it looks like, what are different components of scope statement. But it is important that after gathering the requirements and prioritizing them, we set our scope scope statement that need to be approved by either client or your senior management. Totally depends on the project nature. And then there comes next component. Uh, Tanya, can you please help me to read?
Assess what purchase and create procurement documents.
Yeah, so we already discussed about it. Why we basically think about procurement early, because we might require goods, we might require services. If goods are required and if we are importing them from overseas, then we always think about the lead time. Similarly, if we are going for the services, then we also need to think about, because we are going to make our team soon. We need to think about that. Do we require some outside contractors as a part of our team or not? If contractors are required, then maybe we have to go for the advertisement, and then we have to go through the hiring process. If the project is only 1 year long, then might be we start bit early this hiring process or this procurement process. Once that is done, now we are in a position to determine our planning team. As a project manager, we really don't do planning while sitting in our office. What we do is we always consult with the subject matter experts about what work needs to be done, uh, what activities are required to complete each work, how much would be the cost, how much time it will take, so on and so forth. Similarly, we might need the help of our project management team members. For example, schedulers, planners, project coordinators, or programmers who write the program on Microsoft project or Primavera, so on and so forth. Okay, with the help of all those subject matter experts and management, project management team, uh, we can develop a realistic plan, a plan that should have a buy-in. And we all should would be agree that once team members are involved in the planning, then basically they have their buy-in in that project because they planned it, they determined the schedule. Now normally they try to complete that project within that schedule. Mm, Next, yes, Grace, can you please help me to read?
Thank you. Create WBS and WBS dictionary.
We are going to discuss work breakdown structure and work breakdown structure dictionary in more detail when we will be studying our scope management. Okay, so but here just one comment that from our scope, from our requirements, we decompose our whole project into phases, then from phases into small work packages, and we keep on decomposing it up to the point where we feel that, okay, each work package is a single entity that could be managed, or we say manageable work packages. And WBS dictionary is nothing but the information related to each work package. Next, Myra.
Create activity list.
So once our scope is fully decomposed and we got number of work packages, for example 60 or 80 work packages for a project that needs to be done. Now next step is we have to define activities, what activities we need to do to complete each work package. For example, for work package 1.1 we need to do 10 activities, 1.2 we need to do 2 activities, so on so forth. By doing that, we get a thorough activity list. Later, that activity list also need to be sequenced so that we can clearly see that which activity needs to be done first, which activity needs to be done second. And there are many factors we need to consider when we are doing the sequence of the activities. Those factors could be some hard dependencies between the activities. For example, you cannot plant a tree until you dig a hole. So this activity has a hard relationship. Firstly, you have to dig the hole, then you have to plant the tree. Similarly, there are also some soft dependencies, or we call them preferential dependencies. We also determine the dependencies based on our resource availability and their schedule, so on and so forth. So we do all that work after creating work breakdown structure. So activity list that is well sequenced. After that, what we do?
Create network diagram.
So purpose of creating network diagram is to get a realistic schedule. And we can clearly see that which activities are critical, which activities are not critical, which activities need to be completed on time, and which activities are there which have some slack time, some free time in them, so on and so forth. Next, Sukanya.
It's estimate resource requirement.
So for each activity, which physical resources and human resources are required? Next.
Estimate activity duration and costs.
So once our resources are determined, then we can determine the duration and costs. Why? Because it highly depends which resource is available. For example, to do one task for a senior subject matter expert, a senior plumber, it might take only, for example, 1 day to do it, but he may charge us like $100 per hour. On the other side, if our resource is a junior plumber who might take 1.5 days, around 12 hours of work, but at the cost of $50. So once our resource requirements is determined, then we determine our activity duration and costs. Yes, Pedro, next.
Sorry. Determine critical path.
So what is critical path? We will learn it through a method, very famous method used in scheduling called CPM, critical path method. It tells us that which activities are at the critical path or near critical path, mean which activities must be completed on time so that our project should be completed on time, and which activities are there which has a bit of flexibility. Next, Pedro.
Where's that?
Yeah, I think it's develop schedule.
The develop schedule. Sorry, it was very small. I could not read. Develop schedule.
I think we can zoom in. Let me try.
You can go
Yeah.
few options actually. Oh yeah, thanks for that.
Yeah, so I did it somehow. I was not aware that I can do it like this. Okay, yeah. So develop schedule. Develop schedule is basically a schedule that should be realistic, on which project manager should be confident that, okay, yeah, this is a schedule I can say with 99% confidence that our project will be completed. So once all the activities are estimated, sequenced, their duration is determined, critical paths are established, so on and so forth. Now we are in a position to develop a schedule by using many different schedule optimization techniques, resource optimization techniques, where we will be confident that this schedule is a realistic one. And then there comes the next component, Pedro.
Develop the budget.
Yeah. So develop the budget. So schedule and budget go hand in hand. However, when we are developing our budget, we also think about our contingency reserves and management reserves. Contingency reserves are to manage our risks. Then next, Pedro.
Determine quality standards, processes, and metrics.
And again, as I said, that it totally depends on the nature of the project. For example, if it's a manufacturing project or mining project, then quality standards and processes could be much rigorous as compared to, for example, if you think about an education project or so on and so forth. But nevertheless, it's an ultimate responsibility of project manager to think about the quality of the deliverables, plan about it, make strategy about it, look at the standards that might come from the organization or from the industry itself. Okay, and normally each organization have their own quality requirements that needs to be fulfilled by each project team. However, the quality metrics for each projects are determined separately because the deliverables are different and nature of each project is different from other projects. So quality metrics are normally established by project manager with the help of quality team. Yeah, Myra, can you please go to next one?
Determine team charter and all roles and responsibilities.
Yeah, so determine team charter is basically, you can think of like working agreement. Also, it talks about resource breakdown structure. that how many resources are there, how they are going to work, how they are going to communicate, how frequent they are going to communicate, how often would be meetings, who are responsible of which component, so on and so forth. In fact, we develop many different type of tables, or you can say matrices. For example, responsibility assignment matrix, that is RAM. And then there is an other matrix called Rossi matrix that talks about responsibilities, then accountability, to whom to consult, to whom to inform. We are going in depth of all of them soon, but now we are at a position where we are going to discuss with our team what would be the working agreements and what would be roles and responsibilities. And in fact, many times it happens that where there are joint ventures, team members comes from many different departments or even from many different organizations. And when they come, they really don't know each other. They just come individuals. And then we have to bring them together and we have to convert them into a well-performing team, or normally we say highly performing team, so that we can get the required objectives. Next.
Plan communications and stakeholders engagement.
Yeah, thanks, Eamon. So communication and stakeholder engagement goes hand in hand, because like as a project manager, we do communication with our stakeholders. And in fact, in waterfall approach, the team is also a stakeholder for a project manager. Next, Grace.
Perform risk identification, qualitative and quantitative risk analysis, and risk response planning.
Yeah. So risk management is a whole field. Everybody can understand that it's a thorough and detailed area where project manager needs to think about. Without risk management, any project cannot be succeeded. We always need to think about the projects. In fact, when we talk about waterfall approach, what we do is we run around 7 different processes around risk management. In fact, there is a whole certification by PMI called RMP, Risk Management Professional. The project managers who work in the industries where risks are pretty critical, for example, where human life is at risk or our essential money is at risk. In that cases, we need to go for the risk analysis in much more detail than standard projects. So people who work on those projects after doing PMP, they also go for RMP, where basically they learn about how to identify the risks, how to conduct qualitative and quantitative analysis, how to plan for the risk responses, who will be the people who will take the actions once risk will trigger. So after developing the risk responses, after planning for the risk responses, what project manager and team does, they just keep on doing their work and keep an eye on the risk. Mean they keep on monitoring the risks. And once risk triggers, they apply the action already determined. Most of the time, those actions are already determined, but sometimes we have to go back and in case we cannot identify a risk on time, we need to go back and do our exercise of risk identification and qualitative and quantitative analysis again. If risk was like unknown risk, the risk we even couldn't determine it. Normally what happens in the start, we have like maybe 100, 200 risks on a project. With the passage of time, those risks keep on reducing. As time passes, risks become less and less. And normally once project is completed, all risks are gone. In waterfall approach, risks reduce with the time. However, in agile approach, as they claim that they focus on the risks. They try to eliminate or mitigate the risks early. They really don't put the risk as a back burner. Once there is a risk and the value of that risk is pretty high, then they target that risk so that risk should be either eliminated or if we are going to fail because of that risk, we should fail fast. Fail fast mean if project is not going to be completed in a successful manner, then we should know about it early than later. That's basically called failing fast. It helps us to save a lot of money, a lot of schedule, and a lot of resources. And that was risk. Next is go back iterations. Now, we did a lot of things in planning so far. If you look closely, we talk about scope, schedule, cost, quality, resource management, communication, stakeholder, risk identification, procurement, too many things. In fact, we did a very good planning so far. However, once, for example, we are planning for cost, okay, maybe we get some information that is useful to update our resource management plan. Then what we do, we go back and update the resource management plan. So this is basically that go back iteration, go back and refine your plan. Okay. So that our project become, our plan become a very detailed and well-refined plan. Next, Tanya.
Finalize procurement strategy and documents.
So we start developing our procurement plan in the start, but we keep on developing, and here we finalize it. We made the decision that these goods are required and these services are required. Now we are going to finalize it. Soon we are going to conduct that procurement, either contractors or the material. Next.
Create change and configuration management plans.
So change management plan and configuration management plan is also part of our project management plan. We talked about that there are total 10 knowledge areas from integration till stakeholder, but we didn't say change or configuration management or any other is also part of project management. But in fact, they are also part of our project management plan. When we develop our project management plan, we think about if change will come in our scope, how that change will be treated. Okay, what is the process? Who will be the people involved? And how we will basically assess that change and how we will implement that change if it is approved by the competent authority. Similarly, configuration management plan talks about where basically we track the changes in our deliverables, in our documents, and versioning of the documents, versioning of the all different deliverables, our requirements, so on and so forth. So this plan is also part of our project management plan. Next.
Finalize all management plans.
So once change and configuration management plan is done, now we can finalize our project management plan, and then we are also going for a next step that is very important. It is also done at the time of planning. Let's go back there. The next point is develop realistic and sufficient project management plan and baselines. In fact, we are going to discuss today our project management plan in much more detail, where you will clearly see that our plan not only consists of subsidiary plans, in fact, it also consists of 3 baselines. One is our scope baseline, the other is our schedule baseline, and the last one is our cost baseline. We are going to talk about baseline very soon. We will see what does it mean baselines? Okay, and what is the purpose of a baseline, so on and so forth. But it is important to note project management plan not only consists of 10 to 13 different subsidiary plans, but also consists of 3 baselines. Once everything is done, next step is to get approval, to get sign off our plan, because until it's not signed off, it won't be a formal plan, and changes still may come until it is finally approved. When we say finally approved, the whole project management plan, the scope, the work breakdown structure, the scope baseline, the schedule baseline, cost baseline, our cost estimates, our budget, everything is now approved. If any change is required, now it needs to go through formal change process. Okay, until plan is not formally approved, changes could be done as required. They need not to go through a formal change process. Next, Pedro.
Hold kickoff meeting.
Hold kickoff meeting. Basically, this meeting for big projects is like it's a big day where all the team members, they come together, project sponsor join that meeting, clients they may come, operational or functional manager may come. In fact, project manager does a very thorough planning for this meeting, because in this meeting all the project team members, they meet with each other, they get their roles and responsibilities. It should be well planned, and it is highly recommended that all the uh, right stakeholders who needs to be on meeting should attend that meeting. Otherwise it would be useless. So from here the actual execution starts. And then there comes request changes. If there are any request changes, you can go and do it, no problem at all. But you can clearly see that these request changes are basically those formal changes, formal requests related to changes. Until there was no formal approval of the project, no formal request changes were required. You can update whatever you want, your plan, your schedule, your cost estimate, because you are planning about it. But once it is approved, now if there will be any change in anything, it should go through formal change as per change management plan, as you decided how change will be made. So this was planning. Any questions?
No, sir.
So does it
Thank
make
you.
any sense? Tanya, Grace, Pedro, Eamon?
For me, trying to do that when I was talking through it before and I was getting confused about where to put things, that's really clarified it. Thank you.
Yeah, you're most welcome, Tanya. So we are moving further. Now we are going to our next chapter. That is basically our first knowledge area. I would highly recommend the people who didn't get PMI membership, they should get that membership, because you can go and download PMBOK. PMBOK is pretty important. PMBOK is a very thorough guideline and is highly recommended. If you are going to do PMP, you must read PMBOK at least once. In PMBOK, first 3 chapters were again introduction to project management framework, role of the project manager, so on and so forth. Chapter 4 is about integration management, and similarly we also have our chapter 4 that is on first knowledge area, that is integration management. But before moving further, can you guys please share that what are different knowledge areas? Total 10. Can you please share with me?
First two are integration management and scope management.
Yeah.
Is it even?
Yeah, integration and scope management, two knowledge areas. Third, there is no sequence. You can name any knowledge area. Anyone, any knowledge area in mind? Integration, scope management, next.
Schedule.
Schedule.
Yeah.
Sorry. Go ahead.
Schedule,
No, all good. Schedule management.
Schedule
schedule
management,
management,
fantastic. Next.
cost
Yeah.
management,
Yeah, knowledge area 4 is cost management. Fifth,
Quality.
Resource management.
resource management, true. Sixth, so
management.
Communication management. Sorry.
communication management, procurement management, agreed. What else?
Risk management.
Risk management, yeah, true.
Quality.
Quality management, true. And the last,
Stakeholder.
Stakeholder management.
yeah, stakeholder, or you can say managing stakeholder engagement or stakeholder management. Did we talk about resource management?
Yes.
Yes, I think.
Yeah.
so.
Okay, awesome. So these are 10 knowledge areas and there are 10 chapters. We are going to cover these knowledge areas in those chapters, starting from chapter 4, ending at chapter 13. Same is the case in PMBOK. Also, not only PMBOK is a very good resource, there are also some books available. For example, Rita's book, whose chart we just studied. Her book is written in a very good way. So if you really want to learn much more about project management, I would highly recommend that go and get the version of Rita's book, that is version 10, that is latest version. Okay, and this version also will be useful when you will be doing your 2021 exam prep. Mean if you cannot appear exam before Christmas, then that book will be very helpful. But nevertheless, if you're getting PMBOK, it is more than enough. Now let's move further. Integration management. Integration management is basically the main responsibility of a project manager. This is the main thing a project manager does. Integration management is the knowledge area that is just like a bond between all other knowledge areas, just like a gel between the knowledge areas. It balances out all the processes in all the knowledge areas. Mean, if you are doing a integration management process, integration management knowledge area process, it will have the combination of all the processes from all different areas. In fact, there are total 7 processes that comes under integration management. And if you read these 7 processes, you will clearly see that these are the most important processes on any project. Let's go through these processes and see what are these processes. Myra, can you read all of these processes?
Develop project charter.
So project charter, this is the process that is in initiating process group. And this is basically a formal start of a project where we talk about our project at a high level. We talk about all different components of a project, starting from our scope till stakeholders. We cover them, but at a very high level planning, at a very high level. So this is project charter. We are going in depth of project charter today and this process today, but let's go to our next process.
Develop project management plan.
And this process comes under planning process group. Okay, it is from integration management. Knowledge area is integration management, but process group is planning. Here we develop that thorough and detailed plan that consists of all subsidiary plans, all three baselines, and also some project documents. Once our thorough project management plan is developed, the next stage is follow that plan, and it comes in our next next process. What is this process, Myra?
Direct and manage project work.
So basically, this is the day-to-day responsibility of a project manager. Once planning is done, he or she needs to use work authorization system and keep on directing the work to the team members and keep on managing the project work, including taking care of the deliverables, taking care of the reports, taking care of the data, taking care of the knowledge produced as a result, so on and so forth. Then there comes the next uh, process.
Manage project knowledge.
Uh, Before version 6 of PMBOK, current version is version 6. I believe everybody now remember. Okay. Before version 6, manage project knowledge process didn't exist. It was not part of PMBOK version 5, but we everybody understand in 21st century knowledge, the information, the data is much more important, even important than the oil. Now people who got the knowledge, who got the right information at the right time, they are much more powerful because they can make the right decisions. So it's very important for a project manager to understand the importance of data and importance of information and knowledge, how to use previous knowledge to execute the project in a good way, and how to manage the knowledge that is produced as a result of this current work. Okay, for the sake of not only improve coming phases, but also for the organization, for the enterprise to use them for the future projects. Next, Mara.
Monitor and control project work.
So here, this integration management process group, it talks about both monitoring and controlling of the project work. Here we think about how to control our scope, how to control our schedule, how to control our money that is being expended on the project, so on, so forth. How to keep an eye on it, how to track it, how to review it, and if there is any change, how to manage that change, all those bits. If we are deviating from our baselines, from our scope, schedule, or cost baseline, what's the issue? How can we improve it? Do we need some more money? Do we need some more schedule? More time? Do we need some more resources? Or there was a scope creep into our scope? That's why this issue happened. All those bits comes under monitoring and controlling project work. In fact, directing and managing project work and monitoring and controlling project work, they go together. Then there comes our next process.
Perform integrated change control.
When we say perform integrated change control, it says that if there is any change, though we really don't prefer in waterfall methods, that once scope is well defined and accepted and approved, there shouldn't be any change. But changes are inevitable. They may come anytime because of any reason. But if change comes, then by following our change management plan, we perform integrated change control. That has its own steps, and we will talk about them when we will be discussing our process in more detail. And then there comes our
Close project or phase.
so this process or the activities related to closing are done when once we are closing down one major phase or finishing our project, and we already know that what different activities we should do to appropriately close our project, including handing over the deliverables to the clients, to the stakeholders, or to the operational teams, getting sign-offs and uh, creating lesson learns, archiving the information, clearing all the invoices, or even celebrating the success of a project. All those bits comes under close project or phase. So you can clearly see that, guys, all these processes are very, very important. And these processes are basically, they move around the project manager. Project manager is the main person who is doing all these processes. Uh, He's the one who is basically helping the project sponsor to develop the project charter, leading the project management plan, directing and manage the project work. His key responsibility is to taking care of project knowledge, monitoring and controlling project work, project deliverables, carry out integrated change control, and efficiently and effectively close our project or a phase. Any questions? Now, before going further into project charter, uh, let's talk about pre-project phase. The phase when project is not started, but project selection is going on. And do you guys remember what were different uh, activities that are normally done by the organization, uh, by the organization or by the senior management with the help of business analyst before starting a project?
Cost and benefit analysis.
Yes, cost benefit analysis. This is one of the key method to do our financial analysis, or you can say feasibility study or feasibility analysis. This is one of the key process, cost benefit analysis. Yes, what else?
Assess the current and future state of the organization.
Yeah, very, very important. Yeah, was it Myra? Yes. So Myra, it's very important that once we start thinking about, okay, uh, we need to do something, we need to spend or invest on an initiative. Before that, we need to do too many other things. The first thing is, as you suggested, assess current state or future state. But before them, there is another thing. Let me share that. If you just give me a second, I'm opening the whiteboard. Okay, and here I am writing down the text. So it's very important before going to anything is to identify problem or opportunity. Yeah, I mean, why we start a project? Once there is any issue or there is a opportunity to capture. So that's very important to understand that problem or opportunity well. Okay, maybe that problem is not worthy to invest on it. Maybe our current systems, current resources, they can manage this type of problem by themselves, or opportunity could be grabbed very easily, or might be it is not of any worth. Then there comes our next stage. Next stage is, as Myra just said, we assess current state of the organization. Uh, let's write it, assess current state. It basically talks about our current capabilities, our current focus, our organizational architecture, the structure, the key objectives, so that we can at least see that we should have a very good understanding about our organization, our organizational capabilities. Okay, so that's next step. After that, what we do is we normally determine the future state. Remember guys, current state is called as is state, mean our current state. And future state is called to be state. To be state is where our organization wanna go from our current state, from our as is state by resolving this problem or opportunity. Once we have done this thorough background work, remember, normally project manager, they don't do it. I'm discussing here so that you can understand that how we select a project. Okay. So future state is our future goals, future objectives, organizational future goals and objectives, where organization wanna reach, wanna to be from our current state or as is state by resolving one problem or opportunity. For example, our if it's an insurance system, client claim system is manual. For example, we wanna go to next level. We wanna make it digital. First of all, we need to understand the problem, how much it is costing us. Okay. What about the competitors? What are they doing? If we are losing our clients because of this lengthy manual process, so on and so forth, then we look on our current state, what capabilities we have, where we have our strengths, our weakness, what is our current technology system, our infrastructure, technology infrastructure, so on and so forth, our processes, and then we go and determine what we want and what is our objective, what we want, how much cost reduction we will achieve by converting our claim system, insurance claim system from manual to digital, so on, so forth. Based on all this information, what senior management or business analysts, what they do is they basically propose solutions. Remember, these solutions are at a very high level, and normally these are not one solution. They are normally more than one solutions, so that senior management, the executives can review those solutions and choose the best one. Okay. So once solutions are recommended or proposed by the business analysts or system analysts, the next stage is where basically we choose one of those solutions or maybe two of those solutions and go for further analysis. When I say further analysis, basically I'm talking about feasibility study or feasibility analysis. And when I talk about feasibility analysis, I'm talking about feasibility related to technology, related to current system, related to finances, so on and so forth. So financial analysis or cost benefit analysis is a part of our feasibility analysis. Once feasibility analysis is done, financial analysis is done for one or two top solutions, top proposed solutions, then at this stage, we can say that, okay, now we can start thinking about budget approvals, start thinking about the investments on a particular project or program. Okay. So what we do, we basically develop our business case. So next process is developing our business case. And what is business case? Basically nothing but all those bits. And on top of that, this business case may also include benefits management plan. What is benefits management plan? Benefits management plan says that, okay, once we did a thorough business analysis, we are going to invest $3 or $4 million on a project. What benefits this project will produce, this program will produce? Not only what benefits, but how to capture those benefits, how to capture that value, and how to measure that value, that if we achieve that value or not. Uh, Business management, um, sorry, benefits management plan plus business case. They could be one document, they could be separate documents, but they are the two most important inputs for our project charter. Okay. Any questions?
Yeah. So this is the initial stage.
Yeah.
How involve the project manager at this stage? Because it's even probably at this stage, the project manager hasn't been assigned just yet.
Fully agreed, Grace. And most of the time they are not assigned, but as business case, that is a combination of all these bits is one of the important input for our project charter, where project manager is assigned, and also later he is the one or she is the one who sets the project objectives. And those project objectives should be aligned with the business case, because business case is a bridge between our organizational objectives and project objectives. It's very important to understand that why a project is initiated, why the investment is made. We really don't want to have that gulf between our project and for the reasons for which our project is started. Yes.
Yeah. Okay. But if the company, for instance, has got a business analyst,
Oh.
Yeah, because in our case, in our sort of department, in my company, we're not necessarily involved during the development of the charter, although we
Yes,
are
I fully agree.
consulted. Yeah,
Yes.
we are consulted because it just appears that we have a sort of a process already, or even template that we can provide and help the solutions team and the
Oh.
skills team.
Oh.
Yes, yeah. So okay, but I can see definitely the benefits of being involved from the
True.
start. Absolutely.
True. And sometimes, project managers are not even hired at that time. They really don't have any idea. The only thing they get is maybe a business case, and he or she need to go through it before starting the project. But they should understand that what happened previously. And as you said, that project charter is not a responsibility of project manager, not at all. No doubt project manager can support the development of project charter, and we are going to study in our process one, but it is the responsibility of project sponsor, the senior managers who basically started that project. So yeah. So let's move further. And let's go back and discuss our rest of the slides. So as Grace just mentioned, project manager is not typically involved with the project selection, but should understand how and why the project was selected. Okay. Project selection involves the development of business case, as we just discussed. And those business cases could be reviewed by a panel, senior business analysts. The decisions around multiple options, multiple proposed solutions could be based on some scoring models, but on top of everything, economic measures are some solid measures that are normally done, that are basically normally made to make a decision that either we are going for solution one or solution two. Are we going for Microsoft or Amazon or Google Cloud, or maybe even Alibaba Cloud if it's very cheap? We really don't know. So, these economic measures are one of the solid proof that, okay, we should invest money on option one or option two. And when we talk about economic measures, they are of many different types. The first one is ROI. Everybody knows about it. So, Tanya, what do you think? What is the formal definition of ROI?
as it is here, or how I interpret return on
Yeah,
investment?
yeah, sorry. Yeah, your own interpretation. That's more important.
Yep. Just, so what are the gains that you're going to receive, or what are the outcomes that are going to be of value to the organisation in comparison to how much you have to pay?
Sure. How much you invested and how much return you got. So cost versus benefits. So this is one thing. And then there comes another way of measuring economic value, that is called PV, present value. It is defined as PV is present value today of future cash flows. This is formal definition, but anybody has understanding what is PV?
No, a bit more insight would be good.
Sorry?
Yeah, maybe just a better understanding of what the future cash flows,
Yeah.
is it the revenues that they're talking about there?
Yeah. So it is basically talking about the worth of money. The worth of money for $100 today is would be less after 1 year. So would you like to spend $100 now to get $101 after 1 year?
No.
No. The reason is the present value of 101 might not be even 100. It could be even less than that, maybe only 96%. Instead of investing $100 on a project, why not just put it in the bank, in the bank and get, for example, 3% interest on it. And at the end, you will get 103. So this is basically PV, the present value of future cash flow. If you're getting $101 by spending $100 today, you might not go for that project. Then there comes our next concept, that is called net present value. Net present value talks about not only about present value, but it also accounts for multiple years. Okay, the formula to calculate net present value include multiple years. For example, you spend $1 million today. In first year you are earning 300, next year you are earning 400, next year you are earning 400, so on and so forth. Still you can find out that is it worth to invest this project or not. Now let's go back to our whiteboard and discuss NPV in more detail. Okay, so can I clear it? Yeah, clear all my drawings. Now here comes NPV. NPV talks about if you're spending, for example, 1 million now, and first year you are getting 300 US dollars, New Zealand dollar profit. Second year you are getting 400 New Zealand dollar profit, and third you are getting for more 100 New Zealand dollars as a profit. And inflation rate is, for example, or interest rate is, for example, 5%. Would you spend, should you choose this project or not? Okay, NPV help us to determine that. For this, the formula is, maybe I could draw it better or write it better. I don't know, but nevertheless, let me try. So determining NPV is, sorry, this figure is not NPV. This is our initial investment. Initial investment. So the way is, the formula is 300, what we earn on first year, divided by how much is interest rate? 1 plus 0.05. This is 5%, isn't it?
1.05, yeah.
Yeah. Next year, 400 divided by 1 plus 0.05. 0.05, but this time it will be,
Much less.
yeah, it's square. And then 400 0.05 cube. Now, if we just add them, these three values, they are clearly looking 1.1 million. Okay. But the question comes, do we want to get 1.1 million after 3 years by spending 1 million today? That could be done with the help of NPV. Now, can you please calculate and tell me total NPV?
Total.
Yeah.
Well, the first year is 285 roughly.
Yeah, so in fact, we can use calculators. Anybody,
Yeah.
if possible, just use the calculators and let's calculate it. Maybe just take 2 minutes and we can do it. Everybody can calculate it.
Doctor, just the bracket for the second and third one. Is it for all of them? Yeah.
Yeah, so that would be better. That
And
would be,
Divided by
yeah.
1.8.
So now it's better, I think.
Hundred. 360.
I got 994.05.
994, yes. Thanks, Myra. So 994. So basically the value of 1.1 million as of today is 994. So it's not worth. So what happens is when we will have multiple options, option 1, 2, 3, 4, who will get better NPV is normally selected.
Five is MPV mostly calculated, generally used over 3 years.
No, it totally depends. I mean,
Okay, yeah.
yeah, and normally financial analysts and the business analysts, they sit down, they make the decisions that how long they are going to take benefit of this type of project. It could be much longer than that. And again, there are many other factors to consider. For example, payback period. If we are getting that thing back in 5 years time, we might not like to invest on it. Then if we are getting that money back, or payback period is like 2 years. So there are all those different factors that we normally consider while making a decision for a project selection.
Okay, thank you.
Okay, so that was NPV. Then there comes IRR. So it is not IRA. Excuse me for that. Internal rate of return, that's nothing but your interest rate. So if it would be better, then we will go for that interest rate. And in fact, interest rate is also used in NPV. This type of calculation, internal rate of return, it helps us to calculate that should we put that money in bank or should invest on a project. If putting money in a bank is giving more value, then it's not worth to invest in a project or choose a solution whose internal rate of return is less than bank's return for simple calculations. And then there comes payback period, as we just talked about. Less payback, shorter payback period, better the option. Cost benefit analysis, this is basically ratio of benefits over cost. We can apply it for all different options. The option which will have better benefits to cost ratio will be chosen, though many other factors could be considered. Few more economics or accounting terms that are normally used in project selection. One of them is economic value added, EVA. From the name, you can see that how much economic value a project or its benefits will add to the organization. Similarly, there is another term called opportunity cost. Anybody got any idea what is opportunity cost? Just an educated guess? Anyone?
Maybe a loss of a certain market if you select one. I don't know, maybe. No.
Not a problem. So let's talk about opportunity cost. This is project A, and it is expected that after completing this project, you will get a benefit of $1 million. Okay. This is project B. You will get profit of $3 million if you go for project B. Okay. If you will go for project A, you will earn $1 million. You chose project B because you are earning $3 million or getting benefit of $3 million. Basically, this $1 million is the opportunity cost. If you read the definition, opportunity given up by selecting one project over an other project. So basically, you paid this opportunity cost. You didn't choose 1 million, you chose $3 million project. So opportunity cost is 1 million. If you will choose project A, then the profit you are getting out of project B, now you are not getting. So it's your opportunity cost. Next, sunk cost. Yes, anybody?
I think this is the
Yes, Myra.
I think this is the cost that's already been spent
Yes.
and cannot be recovered.
True. So it's already spent. Okay. So you started a project, you spent $2 million, project failed. Okay. You now planning to close this project. Okay. And starting another project where you have to spend around $3 million. Now, when you are talking about project B after failed project A, will you consider these $2 million when thinking about these $3 million? Answer is no. This is sunk cost. It cannot be recovered. You cannot consider it into the calculations once you are just closing down a project. Then there comes a next concept, law of diminishing returns. It says that after a point, if you keep on adding more resources, you will not get the benefits as expected. Let me give you an example. You are making fence of your home, okay? You put one builder to build this fence. How much time he or she will take? For example, 20 days. If you will put two builders, how much days they will take? Anyone?
Shorter days.
Shorter days. For example, 12 days. Okay. Or maybe if you just divide on 10 days, one started at one end, other started at the other end, maybe 10 days, 12 days. If three people you put, how much days they will take? Maybe 8 days. If you put four, how many days they will take? Maybe 6 days. If you put, for example, 50 builders here, will you get that completed in 3 hours or 4 hours of time? Or 2/3 of the day? No.
Not
So,
likely.
true. So it means that when you are basically thinking about the resources, you always think about law of diminishing returns. At what point, if I put more resources, it won't be useful. So this is this concept. Then there comes working capital. Working capital is nothing but the difference of your assets and liabilities. If you have $3 million assets, your liabilities are $2 million, then you have $1 million of capital that you can use. Few more accounting terms. Now, I really don't want to go in depth of it, but it's good to understand them. Depreciation. Depreciation is basically once you purchase an equipment or an asset, it loses its value over the period of time. You can calculate the depreciation using different ways. Straight line depreciation, accelerated depreciations. Straight line depreciation is very easy. For example, you purchased a car for $10,000, okay, and you are expecting that after 5 years, I will sell it and I will sell it for $2,000. So $2,000 are salvage value. $10,000 is your initial investment. You can determine the straight line depreciation. You said that after 5 years. After 5 years. So how can you determine it? Your depreciation, you can determine it by a simple formula: 10,000 minus 2,000 divided by 5 years. And answer would be 8,000 divided by 5. That is equal to $1,600 per year. So it means that first year your car will lose 1,000 minus 1,600. That is equal to 8,400. After 1 year, the price of your car is 8,400 as per this method called straight line depreciation. Next time, 16 more hundred years would be lost, so on, so forth. And up to 5 years, it will decrease down to $2,000. Any questions about that? Anyone? Yes,
All good.
Grace.
All good.
Okay, thank you. Then there comes accelerated depreciation. We all understand that straight line depreciation really doesn't work. Once you purchase something, you came out of showroom, price is gone like this. Okay, if you bought a new mobile, $2,000, you came out, now it's not of $2,000. It might be only $1,400 or $1,500. Mean depreciation doesn't really go like a straight line. So other methods are developed. First one is double declining balance, and the second one is sum of the years digit. Now let's talk about both of them in more depth. but maybe with the help of our whiteboard. Okay. Double declining balance. For example, purchase is for $10,000. Again, same example. And salvage value is around $2,000. Okay. And we are expecting that we will be able to get this value after 5 years, or you can say life of the asset is 5 years. Now in double declining balance, what we normally do is we say that now 5 years. It means each year how much it will be depreciated. Let's
1/5.
Sorry.
1/5 is it?
Yes. So 1/5, but just one thing we need to keep in mind, 10,000 minus 2,000. Firstly, we need to calculate that. That is 8,000. Then from here we can determine how much it will be depreciated. As you just said, 1/5. That is 0.2, or you can say 20%.
20%.
Isn't it? Now in double declining, what we do? We make it double. We call it 40%. Now let's calculate it. Firstly, 10,000, 40% is declined. How much value is left? 6,000. Isn't it? Next time we will say 6,000, because this formula says initially value drops very fast. Okay, and then it keep on decreasing comparatively at a less speed. So after 1 year, the value has become 6,000. Now 40% of 6,000, that is 2,400, and then keep on doing that. Okay, so this is called double declining method. On the other side, if we talk about sum of the digit method, let me clear all my drawings. Sum of the digit method, if our life span is 5 years, okay, or you can, 5 years, and our initial investment is, or purchase price is 10K again. What we call it, salvage or slavage? I don't remember.
Salvage.
Salvage value is again 2K. Okay, thanks, Grace. Again 2K. Some of the years method says 5 factorial. So everybody knows how much is 5 factorial. 5 plus 4 plus 3 plus 2 plus 1, isn't it? Am I correct?
Yes.
Okay,
15.
So 15. Exactly. So 15. So first year the price will go down 10K minus 2K, that is equal to 8K. Okay. We will calculate the depreciation. 5/15. 5 is mean how many years left? 5 years left in the start. Into 8K. That will be the depreciation for first year. Let me write down here.
Excuse me, factorial is time multiplied, not plus.
Okay, if it is multiplied, then I'm removing factorial, but it is sum of year digit. Okay. So 1/3 into 8. How much would be the value? Anybody?
530. Roughly.
40. 40, I think it will
540.
be 14 over 15.
Mm.
Now that would be, I think to me it would be around, you can say
Sorry, 5 over.
2600.
Mm,
You can calculate,
yeah,
by the way,
2600. Yeah, 2600.
somewhere around that, isn't it? Second year, it would be now 8K was
4.
previous value minus 2600. How much is left?
Mm,
44
yeah,
and 654.
2.
Yeah, or 5.4.
64.
Yeah, 5.4K multiply. Now, how many years are left?
4.
4 divided by 15. And we will get a value here. Third year, 5.4K minus that value into 3 over 15, then 2 over 15, then 1 over 15. What's the advantage? Because when an item is new, when an asset is new, it depreciates very fast. With the passage of time, its depreciation goes slow. Both double declining method and sum of digit, they cover these bits. But we discuss it for the sake of a topic in PMBOK, but there will be very few questions around it. Does it make some sense? This calculation and everything?
Yes.
Yes, very
Okay.
much.
Okay, thank you. So let's go back and keep on discussing our rest of the slides. Once project is selected, it is initiated. Either it's a business analyst or a project manager who is already assigned. They all are there to support the charter development. However, the charter development is the responsibility of project sponsor, as we discussed. Project charter is nothing but a formal initiation of a project, a birth certificate of a project. And this is the document that formally not only confirm who is the project manager, but also gives the authority to use the company's resources to carry out the project activities. On top of that, normally project charter is developed to talk about different aspects of a project, but on a very high level. So you may think of that it is a very, very high level plan, okay? That just equivalent to a vision that what we are going to do in this project. When we start developing a project charter, basically there are some key inputs which are very helpful or that should be considered when we are developing our project charter. Let me share you different inputs, tools and techniques and outputs of our first process. Can you see this screen?
Yes.
Yeah.
Okay, so this is develop project charter. It has 4 inputs. The first one is business documents. Business documents are nothing but our 2 documents, if you remember, business case and benefits management plan. And they are key inputs, especially if it is an internal project. However, if it is a client request or an external project, okay, then client might already have that business document or business case with them. They already made all that background studies by themselves. Now they came to you as you are the contractor. Now everything is well defined by the clients and they make agreements with you. Okay, for example, they want your company to do this project and CEOs or board of governors, they want this project for the for $3 million. Now, what they do is they initiate this project. They develop the project charter, or maybe they can ask departmental heads to develop the project charter. And obviously they're not going to say that, okay, $3 million is the budget for this project. They might say that, okay, 20% is profit, then 2.4 million is budget for this project. But this budget is again on a very high level. It really doesn't mean that you are going to spend all of the money in $2.4 million. Okay, as a project manager, your tasks are still coming where you are estimating the costs and determining the budget. That could be less than 2.4, but could be more than 2.4. But again, important thing is in charter, we normally have a abstract level budget, high level budget. Also, two other important inputs are enterprise environmental factors and organizational process assets. As I told you that these two inputs are for most of the processes in initiating and planning. These are the context and requirements that we have to follow. These are the limitations, environmental factors especially. These are the constraints under which we have to carry out our project. They could be external, could be internal. Similarly, organizational process assets, these are those policies, procedures, systems, knowledge repositories, subject matter experts who are there with the organization. Then there comes the tools and techniques. The first one is expert judgment. Expert judgment is normally seek from the senior managers and from the subject matter experts, and sometimes project manager may also give his or her own opinion while developing the project charter. Okay, and normally you become expert when you have a good understanding of the business environment, industry standards, what's going on in the industry, current trends, competitors, all those bits, when you have a good understanding of those bits. Also, while developing your project charter, you may use a variety of data gathering techniques. I am not going in depth of data gathering techniques today, but once we will talk about gathering requirements, at that point of time, we will go in very much in depth what are different data gathering techniques that could be used. Here, I just want to mention just one data gathering technique that is called documents review or maybe research. Once you are developing your project charter, you might need to conduct a good research of business documents, that is business case and benefits management plan, and some other documents of maybe similar projects so that you can develop a realistic project charter. Interpersonal and team skills, you work with the senior managers, so your interpersonal and team skills would help to develop a suitable and agreed project charter. Meetings are basically those workshops where normally decisions are made by multiple people together. That could be using different techniques. For example, by doing consensus, by doing voting, or by setting a criteria, so on, so forth. As an output, we get our project charter and assumption logs. Assumption log is like our major assumptions that, okay, what we are expecting, what would happen in a project. These assumptions could be related to government, related to budget, related to team, related to schedule, related to some risks, so on, so forth. Now let's go back and discuss our project charter in more detail. However, any feedback or any question about it? Okay, let's go back then. Okay, guys. Develop project charter. Project charter is nothing but our planning at a high level for the project, just to see that if what we are going to do, if it is feasible or not. These are key inputs, as we already talked about. Agreements are contracts, okay? Especially when we have external clients, and sometimes contracts are made between the departments. So there could be internal projects, but still there could be some agreements or contracts. Or if it is group of companies, for example. Business case, as we already talked about, it's a justification of the project, benefits management plan, how value will be created and captured. And that's basically our benefits management plan. And then there comes constraints and assumptions. Assumptions are, as Tanya previously defined, these are the things we believe are true, but they may or may not true. For example, team will remain intact, or our system infrastructure, our current existing infrastructure will support the new change. And on the other side, constraints are our limitations in which we need to complete our project. These limitations could be resources, budget, schedule, or many other. Output of this process, one was assumption log, other is project charter. It's not compulsory to have assumption log separately. It could be part of project charter too. Again, tailoring is very important. Maybe you don't require project charter at all. In case when they already know, okay, we are doing similar type of projects from many years. Our team is still there. We know our project manager. Business case is already there. Why to initiate the project? We already know this is a project. Everything is there. Let's do it. Okay. In few cases, you might need a thorough 3 to 4 pages document for the project charter. For a large project, for small to medium sized projects, this could be only 1 to 2 pages document. And that may have like some of these sections. We are going to go through all the sections, but small and medium project may have less sections or less parts. Even if we talk about Agile, in Agile, normally the project charter is very, very small. It consists of three components. Project description, how to do it. Basically, this is called working agreement or team charter. So first is description, another is how to do it, and the last one is acceptance criteria. How we will say that our project is successful? That's called Agile project. Much more short, lightweight as compared to waterfall project. On the other side, waterfall project might have, charter might have different components, and those components will not be in detailed at all. These components are project title and description, who will be the project manager, what would be his or her authority, any associated business case, any resources that are pre-assigned. Maybe we already have team members and they say that, okay, these are the 5 team members who will be working with you on project. You might need more team members and you can hire them as required, or you can acquire them from other departments as required. Key stakeholder list, any requirements from stakeholders, what product or deliverable we are going to produce, but again at a high level, assumptions, constraints, project objectives, acceptance criteria or approval requirements, all these would be at a very high level. Similarly, we might have some very inevitable risks, mean that are like there. So those risks, and also how risky is this project? It's a low risk project or a medium risk project, or maybe it's a very high risk project. This thing could be mentioned at a very high level in the project charter, project exit criteria, talking about in which case we will not continue with this project. Similarly, high level budget, high level schedule. For example, 2.4 million is the budget for this project, and we need to complete in 2 years. This budget is at a very, very high level. Similarly, signature of project sponsor authorizing the project, because project charter is a responsibility of project sponsors. And that was end of our first process. Any questions?
It was actually quite full on.
Yeah, so quite a lot of information.
Yes,
Yeah.
that was very good.
Yeah, thanks a lot, Grace. We supposed to develop one charter, but it looks like we really don't have time for today. So we will see tomorrow if we will get time. We will try to develop one project charter together. But I think you got good idea of project charter, isn't it?
Yes.
Yes.
Yeah.
Yeah. So in case, yeah, tomorrow I can show you the template, one template.
Good.
Okay, yeah. Okay, thank you everyone. Another important thing is again PMI membership. Then you might find a lot of templates related to project charter or many other project documents. And that was basically end of today's session. Now we still have 5 to 8 minutes. We can go for question answers if you have any.
Flies, are we just going to move through the integration management section by section over the next? Is it the way that we're doing it? Is the knowledge areas all at once?
Yes. So we are going to cover all the knowledge areas one by one, all the processes under each knowledge area one by one. Yes.
How do we get the recording? So like the slides that you're showing us have got slightly different information to the resource.
So Tanya, basically we are in process of developing a learning management system where we will give you access, and you will have access to everything that is required, including videos. In case if it couldn't be completed on time, then we will send you the videos.
Okay, thank you.
Yeah. Yes. Any other question? Okay. Yeah. Thank you, everyone. So then see you tomorrow.
Thanks, guys.
Thank you.
Thanks,
Good
everyone.
night.
Bye.